Testing, 1, 2, 3. Hello, testing, 1, 2, 3. Let's see what the volume's like. Okay, there we go. Did we have to hit the green button or?
I think we had it. We already hit it. I'm wondering why this is not going.
Yeah, let's see.
This should
be able to slide, right?
Your
Yeah, it should be able to. It should be. This is, yep,
Okay.
that's good. Maybe I. Um, okay, settle down, get started. Okay, good afternoon, everybody. How's everybody doing during the second week of classes? No, this is too early. It's too early. It's only the second week. So spring semesters, from what I hear, are not the easiest. But as I said to you, I don't have to repeat this, but it's just staying with it and not waiting till the end. A couple of clarification, and one of my friends here just reminded me to make that announcement. The CAFR work, it's not due till the date of your presentation. So that report, nothing is due till, what is that date? April 17th? 22nd. April 22nd is the date of the CAFR presentation, and that's when everything comes due. And what you'll do is you'll bring a hard copy, and you will send me, after the presentation, by email, a copy, electronic copy. And that's how that would work. So just wanted to remind you of that. Another announcement, do folks have the books, the textbook now? I'm hoping you do. If you haven't, please make sure that you get it. I did load the chapters for 3 and 4 online, so those who didn't could get a head start. Okay, so our game plan today is to go through some new stuff and some material that we covered earlier. And what we're going to do today is really start to get into the basics of governmental accounting. And I showed you the statement of activity. We're going to go through that format again and talk about the types of revenues governments have. I spoke about that last time. And kind of what we do with governments is we divide revenues into 2 categories, program revenues and general revenues. And you need to know what each one of those are. It's less than a half a dozen categories, so it's not like there's tons of this, but you should know what, because depending on whether it's program or it's general, you'll know where to place it. Okay? So we'll talk a little bit about that. We'll talk about how revenues and expenditures are classified in the general fund. But more importantly, we'll have an introduction to budgetary accounting. This is the accounting that none of us are used to until you've taken governmental accounting, which is, if you're hired as a CFO of a government organization and somebody says, okay, the council just approved a budget. How do you record that in the books? How do you record a budget? How do you make the debits and credits? No rocket science. You'll find out it's pretty straightforward. Okay? How do you record revenues? No rocket science either here. How do you record encumbrances and expenditures? Encumbrances you haven't seen before, but we'll get to see them. Accounting for allotments, not the most important thing. If there was one thing I wouldn't pay too much attention to, would be the allotments, because most organizations have better controls, computer controls, than doing that. And then reconciling the 2 different bases. So we'll talk about this, and what I want you to do is think of it from a higher level. Don't get too much initially into the minutiae, because you'll get lost, okay? So think about the concepts, and then you'll get it, all right? It will describe a computerized governmental accounting system. In fact, when I was the CFO, one of my jobs was to implement an ERP system for our organization. It was put forth by Oracle, the same system that's used by many for-profit organizations. It was the Oracle e-business suite, and it's amazing what these systems do even for governments. But you know what the most interesting thing about it is? The GASB reporting model has been around for years. Oracle still hasn't figured out how to prepare two sets of financial statements. They haven't. And I will show you in practice how we do that. They're report writers, but there's no seamless integration. You can't hit a button and say, produce for me fund financial statements, hit another button, say, produce for me government-wide financial statements. That doesn't happen in government. And that's why they need government accountants. Hopefully some of you. Okay. And the last thing is classification of revenue and expenditures of a public school system. We will not go into this. This is one item we will skip. This is a very specialized area for people who, for instance, work for a school district. They are to follow a specific set of accounting general ledger chart of accounts, and that's what that is. Okay, so let's go on to first the expenses. Now, if you remember, first of all, what was the difference? Are expenses the same as expenditures? What's the difference? Good, good. So one is under modified accrual basis and the other one is under a full accrual basis, right? Okay. So basically expenses, for the most part in governments, 90% of them are direct expenses. Okay, 90% are direct expenses. Who do they belong to? Like cost of running the city hall, public safety, parks and recreation by programs. Those are what? Direct expenses. Now remember I told you there were some things which we list separately in for-profit accounting but are part of direct expenses. What is one expense which becomes a part of direct expense? Depreciation expense is never listed separately. It always becomes a part of the direct expense of operating it. So if you had a car which was, bless you, which was used for 3 different functions, what would you do? You would allocate the depreciation to those 3 functions, okay? There is one item which is, though, frequently used as an illustration for indirect expense, and that is interest expense. We don't allocate interest expense on long-term debt to functions. We show that separately. Okay. So, no, again, nothing complicated about this, but something to think about. Let's go on to the other side. Revenues. Program revenues and general revenues. Remember I said 2 categories? 2 categories of expenses and 2 categories of revenues. So what are our program revenues? Exactly what it says. Revenues directly generated by the program. So I'll give you an example. So you operate a recreation department, your city, and you charge folks for the swimming pool fees. Okay? They directly offset the cost of your operating the swimming pool, right? They are kind of direct revenues, right? Direct revenues are program revenues. I don't want to use the word direct because that's not the term, the appropriate term, but program revenues directly reduce the cost of operating an activity, right? And they're basically classified into 3 fee, charges, and we'll go through that in a moment. Actually, it might be, before we get to that question, they're into 3 categories: charges for services. If you receive a grant from, for instance, from the state or for somewhere else, so that you could run that activity. That's an operating grant. Or you might receive money to buy a piece of equipment that's used for recreation, for instance. That would also be programmed. Okay. So what are general revenues? And my favorite question in the exam is what you see up there. And if you don't get this right, just one question, you might be in trouble. I'm just kidding. Okay? But you need to know that taxes of all kind are always general revenues. Never forget that. Any kind of taxes, they are general revenue. Okay? It's a very important concept in governmental accounting that you never allocate taxes to, as direct revenues. Okay? And it says earn restricted earnings on endowment and permanent fund. What if they were restricted to a certain program? Then they would be program revenues. If they're unrestricted, then they would be general revenues. Okay? So very straightforward, and don't make it any more complicated than that, because that's all it is. Okay? But the key here is taxes. Taxes are always general revenues. All right, before I get into this, let's do one thing. I want you to turn to page 98, and let's see if you know this stuff. We'll just do a quick little, this is question 3-4, and I'll get to this here in a Okay, for those, here's a question, by the way. Here's a question, 3-4. And just very quickly tell me which one is program revenues and which one is general revenue. First, wow, this is too, okay. Unrestricted operating grants that can be used at the discretion of the city council. General revenue, right? We just showed that because it says what? Unrestricted. Capital grants restricted for highway construction. Program revenue. Charges for building inspection. For building charges. The word is, the key word here is charges, right? Charge for something. For building permits, that's always program revenues. If you charge for something, it becomes a program revenue. Special assessment. Now you have no idea what this is. For snow removal. Okay, and we'll get to this, but it is, take a guess, program revenue. Fines and forfeits, and this is an example, for those of you who read the book, an example of charges for services, and it's very bizarre. I always have students say, why are fines charges for services? But GASB didn't know where else, they didn't want to create an additional column. You know, they have 3 columns, charges for services, operating grants, and capital grants. They didn't want to set up another column for fines, so they put it in charges for services. Okay, so fine and forfeits is program revenue. Motor vehicle fuel taxes restricted for road repair. What do you think? It is general revenue. Even though it says restricted, taxes, general revenue. Unrestricted investment earnings. What do you think? General revenue. Good. We're doing good. All right. All right. Let's take a look at some other items. And what you will find is that in when you go down the statement, you find these 2 items, special items and extraordinary item. Does it have to appear in every financial statement? No. But guess what? Next year, some of the New Jersey school districts or even the state might show one of these line items. Anyone tell me why they might show next year this line item? Okay, this is what I want you to do is look at the definition of each of these items. What are extraordinary items? Unusual in nature and infrequent in occurrence, beyond the control of management. Something that's happened. That's it. Got it. Because now let's turn that around. And let's say you had a storm in Florida. What do you think? You're shaking your head. Why couldn't that be extraordinary? That's right. Exactly. You're absolutely right. It has to be what? Unusual in nature and infrequent, right? The second one's easy, beyond the control of management, okay? And within the control of management, and I'll give you that example. But you have to think of it. So if you have an earthquake, for instance, in an earthquake-prone area, and it's a different story. I wouldn't use an earthquake example. I'd more use a storm example. Now, what about special items? Let me give you an example of special items. So many years ago, we had a governor of the state who was running short of money and wanted to figure out how to generate revenue for the state. And there was New Jersey Turnpike Authority, which operates the roads, and this is through exits. What's the George Washington? 16W. No, actually it goes all the way further, where the turnpike ended, and 95 starts to the point where it goes into George Washington Bridge. So the turnpike owned everything till the toll booths, where it ended. Then the state had the roadway to George Washington Bridge, which is owned by the Port Authority of New York and New Jersey. So the treasurer had this brilliant idea. Got together with the CEO of the turnpike and said, look, you guys have a lot of money, and we need some money. What we like to do is we like to sell you our road, 95, to the turnpike for a couple of $100 million. And you can toll it then if you want to, or do what you want to. That was a transaction. Now think about the state receiving those couple of $100 million. Where do you think that would fall? And the auditor made sure that it fell into one of the categories. There's only one, which is what? Special item. So there is an extreme example, a different example of how the auditors have to show the transaction. They just didn't show the revenue on the state as general revenues or anything like that. They had to show that as a special item. So there's an example of that. By the way, this problem on page see, this is the format for the statement itself. Okay, now I know when you looked at the statement earlier, it seemed more complicated, but this is the standard format. Look at how it's organized. So remember this format, and for those of you who have who are curious to see if you in fact can apply this, if you go to page, this is an exercise which requires you to, and I don't think I assigned this to you, did I? Maybe I did, yes, 310. Exercise 310 asks you to prepare statement of activity, and you have all the data. So this data gets filled into what? That format that I showed you earlier. Everybody see that? And this is how you would approach that problem. What you would do is you take this data, and which page was that? 67, thank you. And gets filled into this, okay? So believe it or not, people who work in government still have problems. They just can't get the statement in their head because of the very strange format, the way it's done. It's not revenues minus expenditures. as you would think it's revenues minus, it's expenses minus revenues, okay? All right, moving on. Any questions? Please feel free to interrupt me if you have a question, because so that's another, so everybody clear about the differences between extraordinary and special items? Okay. And an example of, and you know, we talked about the general fund. These are the types of things they do. So those services, what are we trying to, why do we have them listed that way? Because that's what they do. But it also allows us to track the cost of each of those functions, right? And we are going to get there, all right? Public safety, police and fire, public works. And the reason I have this here is that when you look at this, one of the things you will notice is a function can have several different activities. So the public safety has what? Both police and fire. And it's important because when you are recording transactions, you need to know what goes where, and that's what we're getting to. Okay. Now let's go into budgetary accounts. Okay. Now this is, let me go back to the CFO example. So you've been hired as a CFO for an organization, government organization. Mayor has no idea about the accounting system. There's a clerk there. The clerk knows how to write checks and all this, but as far as governmental accounting, no clue. And unfortunately, about half of our municipalities are like that. Isn't that sad? Okay. In fact, what we have is, in many municipalities, we have part-time CFOs who work for 3 or 4 different towns for that reason. And so now what you have is you have a budget. The budget has revenues and expenditures. Now the first thing you say to yourself is, all right, I expect $1 million from this source this year. I better keep track to make sure we get $1 million. Because if we don't, we're in trouble. So what you have to do is you have to set up a little bucket. And basically, or like, you know, basically as it fills up, you figure out each time how much is left that still needs to be filled. So for instance, your budget for a revenue source was $1 million. Halfway through the year, you find out you've only gotten 250,000. Will you be concerned? Because what should you have had? 500,000, right? Now why I'm giving you this example, okay, let's go on the expenditure side. So you had salaries of $1 million. Halfway through the year, you've spent 600,000. Well, should you be concerned? What's happening? In your head, you know something's happening. You're over 100,000 already, right? The purpose of budgetary accounts is to track that. So basically what you do is you have these budgets which are set up, revenue accounts and expenditure accounts. And then you have the real accounts where you actually book all the costs and you compare those two. And by comparing those two, you figure out if you're doing well or you're not doing well. So in all governments, we have and we need a budgetary accounting system. And what this does is it requires you to keep track of these temporary accounts, budgetary accounts. Once the year is done, you get rid of them and start all over again. Okay? And these are the budgetary accounts, estimated revenues. If your estimated revenues were $1 million and your realized revenues were 500,000, you still need to receive what? 500,000, right? And that's how that's how the ledger is set up. It starts off with $1 million, and as you receive revenues, you deduct that to figure out how much more you need. Now, estimated revenues and estimated other financing sources. Remember I said to you, we don't want to mix up transfers and proceeds from debt with real revenue. That's the distinction. You need to understand the distinction, bless you, between estimated and other financing sources. Okay? Again, there's a difference between the two, right? And appropriation, fancy word for estimated expenditures. We don't call it estimated expenditures. We call it what? Appropriations. Encumbrance, something we've never seen before, are, the easier word is commitments. Okay, now I'll give you an example and you'll see how fast you'll get this. You anticipate revenues of $10 million during the year. Your appropriations for the year are $9.8 million. Good or bad? Appropriations are 9.8 and estimated revenues are 10. It's good because you're spending less than what you estimate, right? Where does that 200,000 go into? Your little savings account? No, we don't call that, into the fund balance. Okay, it goes into the fund balance. And that's the classic example. Now let me give you another example. Your estimated revenues are 9.8 million, but your appropriations are 10 million. Does that raise an eyebrow? What does it assume? That you have $200,000 sitting somewhere to be able to spend, right? So what my point is, when we talk about budgets, they can be, appropriations can, in the classic case, appropriations will equal revenues, but it doesn't happen all the time. Appropriations can be more than revenues or less than revenues, but you should know what that means, okay? And we'll get to that. Yeah. It comes from the fund balance, from your previous source, money that you've had. And that's, that's a big battle. In some towns, I was at a meeting of the American Accounting Association, and they're talking about how in one town, now you would think how many people would know about fund balance, right? They made fund balance an issue in the election. They accused the mayor of having a very large fund balance and said you should rebate that back to the taxpayers. And this person ran on that platform. So there's an example of even fund balance being used as an election campaign. Okay. Again, we'll get to that. Just bear with me. Okay. Again, we're going to go through all of these in much detail, but I want to just, this is our equation. Assets equal liabilities, but fund balance, or assets minus liabilities equal fund balance. Okay. Now there was, fortunately, and that's why I asked you to get the new edition of the book. Some people had the older edition. Someone had bought that, because this has changed. Under a pronouncement which came out about, a little while ago, not too far, GASB pronouncement number 54, it's redefined the way fund balance is shown. It's shown into, basically, I don't want you to pay attention to this part yet, okay? Unspendable and spendable fund balance, okay? Basically it's said, and we'll cover this in chapter 9, is that all fund balance is of two kinds, spendable and unspendable. Spendable is fund balance that you can use to balance your budget or use it for different purposes. And unspendable is fund balance that cannot be used for really any purpose because it's tied up in inventories or something, So we'll again talk about this in a little bit, but I want you to just get the equation down because that's what's really important here. Okay. And I want you to read this on your own. Read up what the 4 different categories of spendable fund balances are. 4 different categories. Okay, I want you to look at that yourself. And again, we'll get to this again. This is a quick review of distinguishing between revenues and other financing sources. Okay, so give me an example of a revenue. Give me an example of other financing source. Andrew, of revenue. Yeah, well, taxes, whatever. It doesn't really matter. I didn't say general or program. I just said revenues. Like proceeds from bonds or transfer from other funds, right? Okay. What would be other financing use? We know what expenditures are. What could be the use? Just like you transfer in, what might you do? Transfer out, right? That's an example. What they wanted to do was make sure, so if the state of New Jersey was supporting New Jersey Transit through some transfer of money, they didn't want to show that as an expenditure. They want to show that separately as a other financing use. Okay? That's why they want to make sure transfers are not mixed up with real expenditures. Okay? But do they all have the same effect? Yes. Because when you look at the financial statement and look at this. Look at the format of this statement of revenue, expenditures, and changes in fund balance. Revenues minus expenditures and other financing sources or uses. If it's source, you add. If it's use, you subtract. This is the standard format, the brother or sister to the statement of activity on the modified accrual basis. Notice how the major funds are shown and how the non-major funds are combined, right? Okay. So everybody with me so far? I don't hear anything. Yes? Hope? Okay. So this should be very obvious. Modified accrual basis based on flow of financial resources. Revenues are what? Financial inflows. If it's a financial inflow, it means what? Your balance, your little account, fund balance goes up, right? If it's outflow, what happens? It comes down. And this is what we talk about. So if your fund balance was $1 million and you received revenues or other financing source of 100,000, what would happen to your fund balance? Would go up by 100,000, right? And same thing. And so expenditures and revenues have a direct effect on the fund balance. Okay? Just like profits have a direct effect on retained earnings, right? And the way we exercise budgetary control is by comparing the actual revenues and actual expenditures to the budget itself. And I'll show you an example. Here's an example. The difference between this statement and the statement we saw earlier, look at the column headings for a moment. So the first column is what? The original budget. What's the next column? The final budget. So you already know you can modify your budget. right? What's the third column? Actual amount, that's your expenditures. And what's the fourth column? Encumbrances or commitments. These are unfilled purchases. You've written out the purchase orders, you haven't received the item, but you've committed those funds, okay? So budgetary actual is what? In this case, does it include this number? Yes, because that's budgetary basis, right? Got it? You are actually showing two bases of accounting here. And maybe you might want to put this in your book. This is being shown on the GAAP basis. And this is being shown on a modified accrual basis or budgetary basis. Because under GAAP basis, we don't recognize commitments. Why? Because we don't have the item. We're not obligated in any way. Okay? But in this, that's the difference. And then this is the column which everybody's interested in. They said, forget about the rest of it. I want to know whether you spent less or you spent more. And you know the bottom line better be less, or you might not be around for long in that office. Okay? So in this case, basically what is happening is that look at this. They expected revenues of what? 982,000. What did they end up with? 976. What is it? A negative variance of 6,385. And I'd like you to make a note to look at this statement a little bit more. We don't have time, but look through it, run through it so you understand what this is. Again, we'll go through it in more detail, but I want you to just kind of get familiar with the format. What is this statement? This is the budget statement, which is part of the required supplementary information. We'll talk about this later. It's part of the RSI. Okay, so that's what we're doing here. Once again, there was one more page I wanted to show you, which is on 73. So you get, I thought this chart is really nice. You've got the accounts, the balance sheet accounts, right, which are your assets, liabilities, and fund balance. Operating statement accounts, new to governmental accounting, budgetary accounts. Tell me one thing. Of these 5 boxes, which accounts get closed at the end of the year? Yes, budgetary, good. Anything else? Operating, yeah. The balance sheet accounts never get closed, right? And any differences here go to where? Fund balance is like your retained earnings, if you can think of it that way. Okay, let's go back. Okay, we talked about this. So I think I spoke about this, which is the way in practice this is done is there are subsidiary ledgers. And basically what they do is for each item, so if you were anticipating permits fees of $100,000, you set up a ledger which shows the amount that should be received as estimated revenues for that. Now this might seem a little complicated to some of you. What's the normal balance of a revenue account? Now I want you to think of this from this point forward. Any budgetary account has the exact opposite balance of the normal balance. So what would be the normal balance in an estimated revenue account? Debit. What would the normal balance be in the appropriations account? Okay. Remember I said appropriation and expenditure. Appropriation is what? Budgetary. And expenditure is your operating, real. So what does the expenditure have as its normal balance? No, debit. Expenditure is, your normal balance is debit, right? So appropriation is budgetary, so what would the normal balance be in the appropriation account? Credit. I just want you to understand that. The budgetary accounts always have the exact opposite. Now tell me, why am I going in this direction? Okay, think about it this way. My first entry during the year to record my revenue of $1 million was 1/1/2013, debit an account called estimated revenue, $1 million. Now I receive during the month of January 100,000 in revenues. How do I record my revenues? I credit them, right? So now what do I do in the subsidiary ledger? I say revenues, $100,000 in the credit. So what's the balance now in that subsidiary ledger account? If I started with $1 million debit and a credit of 100,000, what do I have left now? A debit of 900,000. How do you read that? I still need what? $900,000 in revenues. And that's why we do it this way, because it allows us to read the balance in these budgetary accounts and know how much do we need or how much can we spend. Okay? Again, I think once you look through it, it's really not that difficult, but I want you to understand what it means when we talk about subsidiary ledgers. All right. You know, we haven't done some clicker questions yet. So let's take a look at some of these. And let's hope it works. Oh, you can't see it, right? Okay. Okay. All right, so the first question is, oops, sorry. Okay. What do you think? All right, oh, I forgot, you have the clickers, okay. Read each one of those. Okay. How are we doing there? Yeah. Yeah, actually, sure. Oh, these are shades here. Where's the, hold on one second. I haven't used this before, but you know what? I'm sorry, you know what? I'll have to figure this out. Meanwhile, we'll just have to work with this. Of course, I've lost it now here. Okay. All right. So the first answer here is, do we have everybody here? Okay. Yeah. No? Okay. All right, well, I'm glad that everybody answered. Everybody answered. No, I was just trying to figure out if anyone changed their minds. But, okay. How about here? No? Okay. All right. All right. As you can see, just a few words changed everybody's answer. I like to see that, okay? All right. So let's go back to the next one. And how do I get rid of this? No, hold on 1 second. Okay. All right, the next question is, now this is, you have to know, this is going back to our last, about taxes and the period within which they were available. If you remember that. Okay, how are we doing? What did I say about taxes to you last time? What is this? So is this right or wrong? Good. All right. I'm glad everybody got it. Okay. All right. Next one. Okay, let's take a look at the next one, which is oh, sorry. This. Okay, let's keep on going. All right. Okay, I'm going to stop. Okay, interesting. What do you think? First of all, what does the word available mean? What's there left, right? What are, in governments, remember we had encumbrances? Remember when I showed the budgetary amount spent, it had what? Amount spent plus the encumbrance. So the amount that's available is that difference. So the answer to this then becomes what? What do you, okay, you guys still don't have it? Okay. All right, I'm going to open the polls again. Okay, all right. Okay, that's better. Let's keep on going. Come on, okay. There we go. Okay, Mark is correct. All right, good job. Yes. All right, we'll do now, we'll get into more serious stuff now. And let's see if I can give you a little bit more challenging stuff. Actually, This isn't that much challenging, but we'll give it a try. Oh, sorry. Actually, you know what? I'm sorry. This is a bad question. I just realized this. I took it off from somewhere, and what do you see here? Two accounts. No, you know what? It's confusing. The correct answer, by the way, is estimated other financing uses. That's the correct answer, but we won't do that one, okay? Let's do one more, okay? Okay. Oh, I just told you this already. Okay, we won't do that either because it looks like... No, actually, we will do this question. We'll do this question. Okay. Because for this, you have to think about what it is. So what does GASB tell you to do? What's their normal guidance? Within GASB says for property taxes, it's what? 60 days, right? But there's something else, which only if you've thought about this a little bit more. In this case, I want you to look at the last answer. Why do I do this? Okay. All right. The time after, by the way, this is not the format of the exams you'll have, but this is just to get you thinking about this. We'll do a little, this is just to give you practice here. The time after year end defined by each individual government. You have the ability to define a period different than GASB's. Instead of 60, you can say 30. But you can't make it, a year or something like that, okay? It has to be within that time. Let's see if anybody got this answer wrong. Okay. That's all right. Okay. All right, so let's go back to this. We had a little fun. Okay. We'll just spend a few more minutes and then we'll take a break. All right. So why do I have these listed here? We know these are the sources. But what I want you to think about when you see these is when do you recognize them as revenues? You say what is that? Most of you would say, well, I'd recognize them and I receive them. But that's not in every single case, okay? So in most cases, that's how it would work. But I want you to think about the recognition rule for these revenues, and that's why we have them. Besides knowing what they are, okay? Now the taxes everybody knows. What does the word ad valorem means? Ad valorem. That means based on value, right? Okay. And self-assessing. Okay. Special assessments. We'll deal with this. Special assessments are special taxes that are levied for a service that a town would not normally provide. You have a condominium complex miles away from the town. And the condominium folks have said, look, if you pick up our garbage, we'll pay the town for it. That's a special assessment by the town. Though they shouldn't do that because they're still paying taxes, but they might. Okay? Licenses and permits, intergovernmental revenues, right next to that word put grants. And that's when we talk a little bit about grants. Charges for services, we talked about all of this. And that's the definition of what these are. How do you recognize taxes? You'd have income taxes, you'd have sales taxes, and notice the item for sales taxes. Taxes due on sales or earnings that have occurred but not yet have been reported that are usually estimated and accrued. So that's an important fact to keep in mind. Okay? New Jersey doesn't have a personal property tax. We have a real property tax. Which state has it? I think it's Virginia, doesn't it? They have a Maryland. One of those states has a personal property tax. Okay, now comes a one calculation I'd like you to know. Okay? And this calculation uses the gross tax levy. Now let me explain to you what this is, and then we'll just take our break. Again, you're the CFO for the town. They come to you and say, well, we have to set the tax rate for all the folks in the town, all those who own property in town. You have a home. You have to pay taxes. How do they figure out what taxes need to be paid? So this is what happens. And there is a schedule, which I'm not going to show you yet, which is basically what it does is the taxes that you pay depend on how much the town is going to spend. Because where are they getting that money from? From you as taxpayers, right? So what they do literally is they figure out the amount of revenue that needs to be raised through taxation. And let's say that amount is X. Then what they need to do is figure out what is the total value of property all over the town. And let's say that's Y. Is it really tough to find what the tax rate is? Divide X by Y and you come up with a rate. Simple. But in practice, it doesn't work that way. It's slightly more complicated. And I want to just show you that example of how that is done. And I'd like you to work through this example so you understand how it's done. Now this schedule, which is up here, I want you to look at it, but I don't expect you to prepare the schedule. Okay? For this class, I think it's really not necessary. But this is how they arrive. The number that you want to circle is this number. This is the amount that's required from property taxes. Okay? And basically they take the amount that their inflows, subtract what they need to pay, and then come up with the amount that needs to be raised through property taxation. So how much do we need to raise? $3,582,000, right? Now let me ask you a question. If the property value in your town was $358 million, approximately, 358 million, what would your tax rate be? 3,582,000 divided by what? Because you have to distribute that over property which is worth 358 million, right? It'd be about 1%, right? Okay? So that's how I want you to think of it intuitively. Don't think about it as a formula. Think about how you would do a math problem. You have to recover this from all that property. And this is the example that's shown in the book at the bottom. And I know it's hard to read this, but if you would just follow this along, 3,582,000 that needs to be raised. An additional complication, not everybody in town is going to pay you. 4% delinquent. So now you need to recover what? Those 3,582,000 from 96% of the property owners, right? Not 100%, 96%. So how much do you need to raise? Instead of 3,582,000, you need to raise 3,731,000 after you take into the 4%. Okay, it's just simple math. Okay, 3,731,000. And now, once you've figured that out, this is the amount that's raised through taxation, you can then, here the property was worth in town 214 million. So you take 3.731 divide by 214, and it comes to $1.75 per hundred. That's the way they call it. This is terminology, governmental accounting terminology. They don't say 1.75%. What do they say? $1.75 per $100 of property value. The correct way, which many people feel, is this: $17.41 per 1,000 assessed valuation. Now you say, now I'm really lost. What is this all about? Well, you go out and buy a home. The home is assessed at $100,000. Can you calculate the taxes on the home? $17.41 per 1,000. So what do you have to do? $17.41 multiplied by 100, right? To come up with what? The taxes on that property. And that's why they do it this way, because it makes it very easy for people to figure out their taxes. You saw there's a little rounding error, but the rounding is round up so that they get more than less. It's always that way. Okay. All right, let's take a quick break and then we'll come back, and but just make sure that you look through that. Yeah. That will have the example. Less is okay. It's the 15th edition. That's the problem. Yes, if you have the 16th edition, it's okay, because last year we used 16th edition. Let me see it. Huh? That's no good.
You mean only this chapter is different?
No, the many other chapters are slightly different. Yeah. Yeah. No, I only have. Yeah, I only have the first 4 chapters. That's it. I don't have the rest of it. Yeah. Okay. Yeah.
Question about the project. Do you have like a project instruction sheet?
Well, I brought examples of it, but we'll talk about it. Okay, we'll talk about it. It's really just answering those questions at the back of each chapter. You know which one I mean is these questions. See these questions? These are the questions that you have to answer for each chapter.
Like the exercise?
Yes, for every chapter, the first question. Okay, you have to answer.
1, 2.
Yes, you have to answer each one of them for the statement.
Okay.
That's all it is, and then you just compile it, and then you do your presentation using the main points from each one of them.
Okay. And
Okay.
that really huge packet that I saw, that's just the cap.
No, those are the responses.
The
The responses, yes, because they didn't say yes or no. What they did was they showed why they said yes or no. They copied it. They copied parts of the cap right there.
So I have a question.
Yes.
Looking at the distribution of the points, the CAFRS project homework and calculation are all together just worth 2%.
Yes.
So how much does it look? Is it 5%, 5%?
No, I haven't decided that yet. I'm going to see how things go. Okay? I'll see how things go, and depending on how, I wanted to keep it that way to help the class. Okay, it gives me more, it gives me,
The exams will do better.
no, it gives me more latitude in terms of how I allocate the points. That's the reason why. Okay?
Because I was just nervous since 85%.
No.
On exam
Yes, and the
grades.
exam, yes. And 85, that's why I kept it that way.
Okay.
Okay, I kept it. I know you would think I would split it, but I didn't want to do it that way.
Okay.
because this way I can work with the grade. Class participation, I might like somebody's class participation and have it compensate for some of their homework, which they did. So it gives me flexibility.
Okay.
Not to bring it down, but to bring it up.
I hope so.
All right? Yeah, that's what that is. Yeah.
So for homework, like we handed in.
We're not handing, yes, we're going to talk about it right after the.
So when do we find out like our grade on it?
Well, I'm going to give it back to you. I don't know if I'll get a chance to grade it tomorrow, but probably on next Monday I'll give it back.
Is it grade on like completing it, like doing a good job, or is it actually grade like you got this wrong, you got this wrong?
No, I'm going to try to do the former.
Okay.
Yeah, I'm going to try to do the former because it's, to me, based on this percentage, it's not, it's going to be basically acceptable, not acceptable, or extraordinary. That's what it's going to be. But you have to be consistent with it, So internally, I will, I'll make a comment on it if there's some issue. Okay? Yep. All right? Sure. Thank you. Andrew, did you find anybody? Yeah, I'm going to talk to find out. I'm going to talk right after the class, after the break. I'll try to get you, and there's another person who's got the same issue. No, we have. There's one state, Florida, which has only 4 people in it.
Yeah, I was looking online.
Yeah, I'm going to give those guys. I'm going to give those guys 2, so they'll come up with the maximum 6. Yeah. Okay. Sure. No, I'll bring them again if you want to see them.
I just want to see how one of the questions actually said on the.
All right, you know what? I'll try to bring them on Monday.
Okay.
Okay? Yeah.
Yeah, no, I'm at home.
All right, guys. Let's get started. Do we have members of the Florida CAFR here? Yeah, okay, because I'm going to ask you to take 2 members. One, Andrew, and Jimit Patel, right here, this gentleman. Okay, we have these 2, we have 2 people, so does anybody want another member? How many do you have? 4 or 5? Okay. You know what? You'll take Andrew, and they'll take Jimmy. Okay? Okay? Yeah. All right? Yeah. All right. Let's do one thing. Let's get our homework out now. Now we're going to go through this. Everybody has their red pen with them. You should have your name printed on your homework submission. Make sure it has that so you get credit for it. All right, let's start off with the first. How many people do not have the book here? Okay. All right. Might be good for you to bring the book, but we'll try to Okay, so the first question is 1-2 on page 16, right? We'll go through this really quickly. The need for managers to report on their accountability to resource provider has played a central role in shaping the accounting and financial reporting. True or false? Good. I need more people to speak up. True. Good. Thank you. The FASB is assigned responsibility for setting accounting and financial reporting standards for all not-for-profit organizations. Okay, good. 3, governments differ from not-for-profit and business entities by having resource providers who do not expect to receive either repayment or economic benefits which are proportional. True or false? Why? Not-for-profits, yeah. Okay, number 4, GASB regards, where am I? Oh, GASB regards accountability as the cornerstone of all financial reporting. Good. Number 5, government-wide financial statements are intended to assist in assessing fiscal accountability. What is it supposed to assess? Okay. Number 6, the basis of accounting that focuses on when revenues are available for spending on when an obligation has been incurred to expand current financial is called modified accrual. True or false? True. What? I'm sorry? No, that's for revenues. This is the modified, it's the basis of accounting we're talking about. Okay? Okay, no, hold on a second. He says the basis of accounting that focuses on when revenues are available for spending and when an obligation has been incurred to expend current financial resources is called modified accrual basis. It's a generic thing. I know what you're saying, and I know where you're going because you're saying it should also have said available. But the answer here is really true for 6. Okay? I'll talk to you after the class. Okay? I'll explain that to you. Number 7, the financial section of a CAFR typically contains the minimum requirements for general purpose external financial reporting and additional supplementary financial information. What do you think? True. Good. 8. That's, remember, it's the minimum requirements. Remember that little chart I showed you? The minimum requirements for general purpose financial reporting is different from the, yeah, did you have a question? The what? The financial side contains the minimum requirements and additional, the financial section contains the auditor's report. So that's why it's read that way. All right. You know what? If you've written false, you can mark yourself right, okay? But how many of you answered true? Okay. All right. Number 8. It's a tricky question, yes. Unlike state and local governments, the federal government and its major departments and agencies are not required to prepare a management discussion and analysis. False. Good. 9. FASAP standards and federal government financial reporting requirement focus on reporting internal management information as well as external financial reporting. What do you think? True. Okay. 10. FASB financial reporting standards for not-for-profit organizations emphasize accountability for donor-restricted resources by requiring not-for-profits to report net assets in 3 categories. True or false? True. Good. All right. Now we'll do the multiple choice. Special purpose governments differ from general purpose governments in that special purpose governments are what? Everybody agree on A? Anybody got a different answer? Okay. Perfect. 2. Oh, I'm sorry. Yeah. Okay. 2. A distinguishing difference between governmental and not-for-profit organization is what? Excellent. 3. Which of the following statements regarding primary source of accounting and financial reporting standards is false? Which one is it? B. Excellent. Number 4. According to GASB concept statement number 1, the concept of accountability is all of the above. All of the above. Good. D. The concept of interperiod equity refers to whether C. Okay. Number 6. Which of the following is included in the minimum requirements for general purpose external financial reporting of a government? Excellent. Number 7. The basic financial statements of a state or local government include all of the following except? Excellent. 8. Under GASB standards, financial information useful for assessing fiscal accountability is reported in? This is a good question. A. All right. Number 9. Which of the following is not a required section of a federal agency or department's performance and accountability report? B or D? D. Good. Number 10. The primary reason that not-for-profit organizations should report expenses incurred for program purposes separately than for those for supporting services is what? D. Excellent. All right. Now let's go to the next part, which is hold on a second. All right. I thought I had the by the way, the responses to all the questions, right after the class, I'm going to release them under Chapter 1 and 2. So you'll see those printed, okay? You'll find the file. It will be released. Organization-wide, I'm just going to go through these line by line. What do you think? For yes, yes, yes? Okay. No, second one. No, to the right. Management discussion and analysis. Yes, yes, no. Okay, good. Annual performance report. Yes, no, yes? No, yes, yes. Okay, no. It's no. It's no, yes, no. Modified accrual basis. Excellent. I won't repeat it. Okay. Yes, no, no. Reporting of program expenses separate from supporting entries. No, no, yes. Absence of defined ownership interest. Yes, yes, yes. Standard set by GASB. Yes, no, no. Standard set by FASB. No, no, yes. Standard set by FASAB. No, yes, no. Standard focused on both internal and external users of financial information. Excellent. Boy, you guys are doing really good. All right, that's good to see. Excellent, excellent. Okay, so now we'll go to the multiple choice on page 60, the second one. And which of the following is the correct statement about how financial information for the activities of a government should be reported? What do you think? A. Yep. A. Which of the following statements is true regarding the basic financial statements? D. D. 2. D as in dog. 3. In the reporting of governmental activities, fiscal accountability is demonstrated by B, governmental funds financial statement. Not A, but B. Okay. 4, the measurement, focus, and base of the accounting that should be used for the governmental fund financial statements are? Excellent. 5, which of the following statements is true regarding the definition of a fund? D, all of the above. Number 6, capital assets used for governmental activities such as those of the police department should be reported as? Okay, it's the answer is B. Okay? Because in the governmental fund statements we do not, it's based on modified accrual basis, and we don't show any capital assets or long-term debt. So it's only on governmental fund statements. Number 7, assets and liabilities of activities for which the government is acting in either an agency or trustee capacity should be reported in B. There is no fiduciary column in the government-wide statement, so it's B. Under the modified accrual basis, there's the answer, the classic answer, which is C. And number 9, financial information about an internal service fund should be reported in the proprietary fund. Now this is a hard question. What's the answer? Good, excellent, okay. And C. And number 10, who did the math? B. Excellent, B. So that's good. What's the next question? Two six? All right. Agency fund. Which letter do you think that is? Everybody got that? Agency fund, letter H. Capital projects. Debt service. Enterprise. General. Internal service. Investment trust. What? E. Okay. Pension. Permanent. Private purpose trust. Special revenue. Everybody got this thing? All? Okay, that's good. Good. All right. While we're at it, 2-7. Who wants to be the volunteer on this to explain this question? Who wants to be the volunteer and tell me how they did this question? Any volunteers? You're the volunteer? Did you? Yeah, go ahead.
All right, so for each of the rows on the left, like total assets,
Yes.
you take the percentage.
Okay.
Either the 10% test is for government funds, and then 5% for government and enterprise.
Good. Excellent.
It's over 10% for government or 5% for government and enterprise.
Good. And what did?
It has to like hit both of those.
Yes. So what were there any major funds here? What did you find as a major fund?
Housing and urban development grants.
Okay. And that's it?
Yeah.
Does everybody agree? Yep. I think that's good. Good. Excellent. By the way, again, I have the way this is calculated will be in the solution, which I'll release right after the class, okay? Okay. All right, let's just take a look at, I'm going to go through these slides quickly because there isn't really much you can read, and I think you'll get it. So we can spend a little bit more time. These slides describe each of the other sources of revenue. Special assessment taxes, okay, which You can read about licenses and permits, from dog licenses to liquor licenses and so on and so forth. You know, some folks might not think too much about it, but what do you think a liquor license might cost in a shore community down the shore? A lot of money, exactly what you said. Tons of money. So it's not just dog licenses for a few bucks. Some of these licenses can cost a lot of money. Now, the one that I want to just speak about a little bit are the intergovernmental revenues. This is what I want you to think about. Intergovernmental revenues are revenues which go from one part of the government to another part of the government. So, for instance, if the state of New Jersey gives out a grant to one of its local municipalities, or the federal government gives a grant to a local municipality, how do you deal with that? Well, the way you deal with it is you look at the grant agreement and see what it says. It says, all right, what I'm going to do is I'm going to provide you a grant of $100,000 to the state of New Jersey to train folks who need some technical training of some sort. You're the comptroller for the state. That grant is based on a reimbursement basis. What does that mean? The word is reimbursement basis. It means when you spend the money, you will get it. So you do not recognize the revenue from that grant until you've done what? Spent the money. If you haven't spent the money, the federal government might have given you $1 million. Does it make a difference? No, because you haven't met the condition of the grant, which is what? Spend the money. That's one type of restriction. It's one purpose. That's the purpose restriction. The second one is timing. This says that you're going to receive $1 million next year for your town's recreational use. If you receive it this year, do you book the revenue this year? No, it's for what? Next year. So when does it have to be recognized? Next year. Okay? So what you have to understand is that these two conditions I want you to read about: purpose restriction and timing. These are the two things you should keep in mind, and that's how grants are recognized. Okay? And that's all that it is. Charges for services, we talk fines and forfeits. I don't think there's much I can add to this. As long as you don't get into trouble these are court fines and things like that. When do you recognize them? When cash is received. That's when you recognize them. Straightforward. The key is small revenue sources are recognized when cash is received. Very simple. If it's a few bucks, you recognize it only when you receive it. And there are other miscellaneous revenues. Let me see if this question's worth looking at. Actually, this might be an interesting question. On page all right, you tell me, looking at this question, 3.8, how would you classify each one of these items? Let's start off with the first one. Okay, sales and use taxes levied by the government. What is this? These are taxes, right? Okay. Payments by citizens for library services. Excellent. Building permits to construct a garage at a residence. Licenses, permits, good. Traffic violation penalties. Fines and forfeits. Federal Community Development Block Grant. Remember I told you intergovernmental revenues are those grants, right? Royalties from an exclusive contract with a soft drink company. I can't think of what. Well, when you can't think of some category, where do you throw it in? Yes, sounds good to me. Okay. Charges to a local university for extra city police protection during sporting events. Charges for services. Everybody, am I moving too fast? No, we should be. Barbers and hairdressers registration fees, license and permits. So you get the gist, right? Okay. Okay. All right. So I want you to understand these definitions. Appropriation is the legal authorization granted by the legislative body to incur or spend money. And encumbrance is the estimated amount that's used when you purchase things. Once again, governments operate very differently. If you're in a private organization, when you order something on the phone, do you make a journal entry in your books? No. When do you make the journal entry? When you get the invoice or receive the item, right? In governments, you pick up the phone, you order an item, you have to recognize an encumbrance. Now, can anyone tell me why we do that? Why do we have this? Why not just wait till we get the bill and deal with it? All right, let me give you an example. You are on the last month of the year, December 2013. Your budget for supplies is $100,000. You've spent $980,000 already. $20,000 left. You got 3-4 people eyeing that $20,000. They all call and place purchase orders worth $50,000 in the aggregate. If you don't record those encumbrances, what's going to happen? When each one of them gets the item, what's going to happen? You're going to blow the budget, right? When you record the encumbrance, each time they pick up the phone and order, what do they have to do? Enter it into the system. So from 980, it goes to 990. It goes to $1 million, and the next fellow or gal who picks up the phone and says, I want to order, what does the system say? Budgetary accounting? That's why we use encumbrance. And this is what it says, ensuring that a valid appropriation exists, comparing encumbrance and expenditures to appropriation to prevent overspending. Comparison is enhanced by using the same account classification scheme. Now let me ask you another question. You've been hired as the CFO of a town. Can you go buy, has no accounting system, zero. So you say, you know what, I'm going to put a computerized accounting system here. Can you go buy a copy of QuickBooks and use it as an accounting package? It works everywhere. Why wouldn't it work here? It's pretty inexpensive, easy to use. Why couldn't I use? So I don't call things expenses. I just rename the account expenditure. What's QuickBooks missing? Does it make any accommodation for encumbrances? It doesn't record encumbrances. As soon as you record an item, it thinks it's what? Amount spent. When you have an encumbrance, you can call someone and say, you know what, I'm placing the order for $10,000 for supplies, but the next moment you can call the person and say what? Cancel my order, right? For that reason, we cannot use commercial accounting packages in government organizations because they do not, one, support budgetary accounting, and two, do not support encumbrance accounting. Are there government accounting packages? Yes, we call them fund accounting packages. They are available and they do this. And we talked about appropriation, encumbrance, and expenditures. There's really nothing new here. So let's try to run through this cycle for a moment. And I want you to think about this in your minds. Where do we start off from when we start spending? A budget, right? We call that what? appropriation. After appropriation comes what? What's the first step in the purchasing process? Encumbrance, right? Commitment, right? After the encumbrance is done, what do we do? Spend the money, right? Or disbursement, right? So there is this process that I want you to keep in mind, that you start off with appropriation, next step is encumbrance, third one is expenditure, and fourth one is actually disbursement of cash. And you'll see this mentioned in the book. But, okay, so let's talk about one other thing. Oops. How many of you have set up an accounting system? Anybody set up a small accounting system for an organization, a computerized? If not, you might be good. And what was one of the first steps you had to do to set the system up? Yes. Right, and they're called what? Chart of accounts, right? This is that chart of account methodology. Basically what it is, in most places, every account has an account number, right? If you have two organizations, you have O1 organization, O2 organization. In fund accounting, governmental accounting, things are a little bit more complicated. Funds, how many funds do we have? Geez, we have general fund, special revenue fund, debt service fund, capital projects fund, permanent fund, enterprise fund, internal service fund, fiduciary funds. That's your fund level. And you can have O1 for general fund, O2 for special revenue. That's how we set up the accounting system. Function or program, I already talked about that, right? So function could be what? Public safety, right? That's a function, because we saw that in the statement of activity. Organizational unit, who takes care of that function? And you might say, wouldn't that be the police department, public safety? No, it could also be the fire department. So that's an organizational unit. Activity, what could the activity be? Well, if you have trash collection, it could be residential tax trash collection or commercial trash collection. You'll see these examples in the book, but I want you to see how we have these layers of account to get to where we want to. Character, by the way, that object is the account number itself. Surprising. We only think of one thing, which is account numbers. But here, look at how many different segments, these are called segments, in chart of accounts that we have. And this is how it's set up. And there's a little appendix at the end of the chapter which talks about computerized accounting systems. And it shows you examples of that. And this describes basically what I just said to you, the definition of each one of these. All right. You guys do so well that I think we should try another one. Yeah, I'm really happy. I think you guys are getting this, so that's good. Okay. Now what I want you to do is take a look at question 3.6 and tell me which one of these it is. I don't expect you to get it perfectly, but mayor's office, what do you think that is? 3.6. Is it a function, a program, organizational unit, activity, character, or object? Good, excellent. Organization unit. Public safety. What is that? A function. Good. Residential trash disposal. Activity. Good. Accident investigation. Activity. Salaries and wages. Actually, character or object. Okay. Debt service. It is character or object. Okay. Environmental protection. Function or program. Health and welfare. Function. Police department. And printing and postage. Printing and postage, I know it's normally considered an account. For printing and postage, that's why it falls as an object, okay? Rather than printing and postage at the very local level, down at the bottom. And that's how you would interpret that. Okay, let's go back. All right, now these are the journal entries I want you to think about. If you don't get them, ask me now, okay? Because this is what we'll be looking at. Budget gets approved. Why do we debit estimated revenues? Because remember I said to you, budgetary accounts have the exact opposite balance. Appropriations are what? Credited. And what's the difference? We call it budgetary fund balance. Why do we call it budgetary fund balance? For one reason. Budgetary accounts get closed at the end of the year. So whenever you see a budgetary account, we don't want to confuse the budgetary fund balance with the real fund balance on the balance sheet accounts. Okay, that's why we just add the word budgetary. I want you to think now about the ledger. We're not going to be concentrating. Yes, Andrew. Yes, yes, that's right. It's there in case something goes wrong. So, and I'm glad you asked that question because, you know, you never want to run a town or a municipality where there's no buffer. If you have a very snowy winter, for instance, you have storm-related damage, something goes wrong, you need to be able to go to that. You just can't in the middle of the year say, I'm going to raise everybody's taxes. Can't do that, you know. So that's why we have that. Yep. So look at how it's done. So the estimated revenue ledger, all those items add up to what? 500,000, right? And the appropriation ledger, all those items add up to what? 450,000. Everybody see this? Okay. This is the journal entry. Now in the book, you might find this entry broken down into two parts. This is what the book does. They might say estimated revenues, debit 500,000, credit budgetary fund balance, 500,000. Debit budgetary fund balance, credit appropriation. Doesn't matter. This is much easier to look at in terms of the journal entry itself. Okay, so actually, since you guys are so good at this stuff, I think I'm going to give you a little bit more challenging question. I have to make it progressively harder because this is too easy for you guys. Okay. Wait till everybody answers incorrectly now, you know. Okay, now I know this is sounds like this is a problem from the book, but I want you to just take a moment and read this question and see if you can figure out what we're doing here. So what we have, estimated revenues of how much? 4 million. And how much are our appropriations? 4,850,000. Whenever you see appropriations more than your revenues, what happens to your brain? Something doesn't seem right, right? But remember what I said? It can happen. So let me ask you a question. Before you approve this budget, what's the question you'll ask the CFO? Yes, what is the question you'll ask the CFO? If they have fund balance of how much? 200,000. Everybody hear what she just said? I'll ask the CFO if he or she has a fund balance of at least what? 200,000. So let's see the question. Assuming that the city ordinance mandates a balanced budget what must be the minimum amount in the fund balance unassigned account of the general fund at the beginning of the year? What would your answer be? What's the minimum that should be there? 200. That's the answer. Right? You need what? At least 200,000 to start. It'd be better if you had more, but if you had less, you don't have a balanced budget. All right, so that's the answer to that, that you must have unassigned fund balance of at least 200,000. What's the second question? Prepare the journal entries to record the adopted budget. Somebody give me the journal entry for this. Okay. Okay, go ahead. Debit what? Very good. Good. Credit or debit? Budgetary fund balance. Excellent. And that's the entry. Debit estimated revenues of 4,650,000. Debit budgetary fund balance of 200 to equal appropriations credit of 4,850,000. And that's how we look at a problem like that. Okay? I know it always, when somebody explains it to you, it seems simple, but that's really all that it is. Did everybody get that, or anybody have questions? Okay. All right, what I'm going to do is, you can read this later on your own. This is just a snapshot from the subsidiary ledger. The budget had 50,000 as they got money. After these two transactions, now they only need 41,000 because the actual revenue is a credit itself. Okay. Let's look at how we do encumbrances. And this is the classic encumbrance entry. The way it happens is any time in governments you just cannot bypass an encumbrance system. Anytime you pick up the phone or write out a purchase order, you must make this journal entry. When would you not use an encumbrance system? People's salaries. You don't issue purchase order for people's salaries. You know, salaries and wages are not subjected to encumbrance accounting at all. Okay? Though not to take time, but I got to tell you an interesting story. State of California, you know, was in trouble, or has been in trouble. So what they did was, and you know, salaries and wages, even on a modified accrual basis, have to be accrued at the end of the year. So what they did was they said, well, this is what we will do. We will shift the salaries and wages by a week. So people will get paid 1 week later. So the accrual would change, but I think the auditors didn't permit that. But then they tried something else. Remember that GASB rule on collection of taxes within 60 days? They changed the tax collection date by 1 day. So what would happen is taxes which were due next year, they brought them and accelerated them 1 day into this fiscal year. So those are real gimmicks being used by states. And using this, but obviously, you know, an auditor and others would comment on that because that's so flagrant. But going back to this again, whenever you issue a purchase order, you always debit an encumbrance account and you credit something called encumbrance outstanding. And you say, what does that mean? What it means is as soon as you receive the item, you reverse the transaction. So I ordered this item for $500. I debited encumbrances and credited encumbrances outstanding. As soon as I get the bill, what would I do? The first entry, debit encumbrance outstanding, and this is what we're doing. I don't try to not look at this for a moment. this line and this line. Just look at these two lines, okay? See this? We reverse the transaction, right? Now, obviously, what happens is anytime you order an item, you don't get the amount perfectly of the amount. You ever see shipping charges, other things you don't anticipate, the cost of the item is more or less. So what happens then is your commitment was for $500, but when you receive the bill was for $515. So now you debit expenditures because you've got the bill, and this is, we call it this, but you can call it accounts payable if you want. It's the same thing as accounts payable, and this is what we do. Now, I want you to think about what has happened here. If you, and what I like you to do is, since we don't have time, I like you to make sure you follow the journal, how it looks in the, on page 89, the very top of page 89, I like you to follow the transactions, okay? Because as I said, we unfortunately, well, actually, you know what, this is important enough that I think we can try to this is a snapshot of what's going on. This is the Appropriations Ledger for general government. Fund is general, that's the code. They started off with $1,150,000. This is the spending authority they had. They issued encumbrances of what? $38,000. How much do they have left now? Okay? They received the item. Of the $38,000, the items that they received only accounted for $35,000. There's $3,000 worth of items which are still not been received. So they take $35,000 and still open $3,000. The cost of that $35,000 was $35,100. Now think about this. You don't have to understand governmental accounting to do this. I want you to think about this. 1,112,000 includes what? 38, right? Why the difference of only $100 between those two numbers? With all these transactions going on, why only $100? That you have $100 less. Why? Yeah. There was an extra $100 charge which was not in your encumbrance, right? The 38 is already booked, right? That's taken care of. The only additional amount is what? $100. And this is governmental encumbrance accounting, because this tells you how much can you spend? No more than $1,111,900. Now, when you receive the $3,000 worth of materials, does that number change? No. But if it was more than $3,500, what would happen? You'd deduct it. What if it were less? You would add to it. Okay? So I want you to just try to understand these set of transactions. Okay? Anybody lost or? And this shows you how it's done. You know, you had 1,500 issued purchase order, it's now 1,000, and now it's 985. Okay? Little different form. Okay. Accounting for allotments, don't be concerned about this too much, and I'll tell you what it is. In some states, so your financial year is 1 year, right? They don't trust the CFO into doing things right. They say, you know what? We're only giving you allowance for 3 months of the total appropriation. So your appropriation was $1 million. The first quarter allotment is only going to be $250. Not million, $250. And next quarter, we'll give you another $250. And then we'll give you another $250. Now, it doesn't have to be exactly that, because there are activities which vary depending on when they're seasonal, but that's what allotment is. You actively manage it by quarters. Computerized accounting system, it's an interesting area for those who have, of you have a little systems background in the area, because it's really unbelievable. This area has really taken off, and for governments it's quite a challenge to have a system which keeps track of it. Now let me explain to you in practice how it's done. In practice, what we do is the accounting system is based on fund accounting, modified accrual basis. At the end of the year, we produce a trial balance on Excel. And we make the journal entries to convert the modified accrual to full accrual basis. Those journal entries give us a new trial balance, which is then used to prepare the government-wide statements. So guess what? Government-wide statements are only done once a year. Nobody wants to go through the trouble of preparing them every 3 months, because you have to go through this process of converting from one basis to another, because the computer doesn't do it for you. Okay? By the way, if anybody finds something to the contrary, let me know. I'd be very interested if there's a seamless way to do this. Okay? Still have a few minutes. Okay. Oh, these problems are great. All right. Problem 3.9, page 108. Actually, you know what? Maybe it's not too great. Looking at this problem, it's going to take us a little time. I thought it would be good, but what we'll do then is, since, by the way, this accounting for public school systems, as I said, we won't cover this. For those of you who are interested, please do take a look at it. Let's do some clicker questions, since we have so much fun with this. Okay. Okay. All right. Let's take a look at this. Just take a moment to see if you, it's question number 12. Under which basis of accounting for a government should revenues be recognized in the period when they are measurable and available? Okay. How are we doing? Okay. Got it? All right. Anybody else? Okay. So, actually, most people did get it right, which is the accrual basis, no, because that's what the definition is, measurable and available.
Can I ask the question?
Huh?
Ask the question.
Yeah, sure. Okay, remember you were asking me about measurable and available, that's what that is. All right, question number 17. Now, I know you've just learned this, so I understand this, but see if you can figure this one out. Boy, people really know this. Okay. Things are going very fast here. Okay. All right? Okay. I need one more. Who didn't do it? Okay. All right. All right. Well, actually the answer, again, most people got it right. It's the debit to estimated revenues. The what? All right. Number 18. Now, this is, I haven't talked to you about this, so I'm not going to test you on this, but it's one of the things that I should have said something about. Comparison of budgeted versus actual revenue and expenditures. This is a very important area, and I somehow didn't mention this to you before, but you might say, when do you need a budget? For what funds do you need it? You know, you don't need to report a budgetary schedule for every single small fund that you have. It's required by GAAP for general fund and major special revenue funds for which an annual budget has been legally adopted. And that is it's a very key point, and I'd like you to just take note of it, okay? So that's one point which I didn't mention to you before. All right, let's go to the next one. Try to see if you can take a guess at this. Actually, you know what? I'm going to move to the next question. Because I want to cover, we'll do this when we do our review. Okay, we got one more question, all right? Let's do it again. See, I wanted to keep questions which are quick and easy to read. When we're in this time we don't want questions which are long and long-winded. We kind of lose concentration here. Okay, which of the following fund types use the current financial resources measurement focus? What do you think? Which one of them is the governmental fund? Is a governmental fund? Okay, we're done. All right. Actually, the answer is right. The only one is the special revenue fund, right? All right, I think we've had some fun, and for our next class, Chapter 4, please do take a look at it, and have a good couple of days. Okay, good. Yeah.
And that one, 1, 2, true and false.
Yeah.
It said that it only did available for modified accrual basis. That's
Yeah.
put down false.
Yeah.
It has to be measurable and available according to your.
Yeah, but the way it was worded was at
I
a
was on the
more.
fence, and I'm
Oh,
like-
I know, and that's why I understood you. When you told me that, I figured how you're reading it.
See now, because I thought you were saying that like it's only measurable, so that's why I got this multiple
Yeah.
choice question wrong. So I chose
Yeah,
B instead.
yeah, that's all right. What's your name, by the way? What is it? Doyle? Okay, good, good.
And for this question about Doyle, I think it is still the critical words expenditures because an obligation could be created by other reasons.
Yeah, if you answer true, that's fine. I'm all right because I talked to him about it. It's the same question. Okay, guys, make sure you turn in your homework before you go. Make sure you leave your homework before you go, the graded homework. Just leave it right there. Your graded homework. This way I don't kill trees by printing everything over again. Okay? No, you just have to, yeah.
I want to ask this question. I think the central, like,
Yeah, right there on that.
So we should bring the print.
Yes, you have to submit it.
I have submitted from the black.
No, it doesn't matter. You still submit it because this way I don't have to print it. I can just check.
Can I wait for a second so I can print? Go outside.
You need hard copies of both?
Yeah.
Okay.
All right. You know what you do? Give it to me on Wednesday. Okay?
Okay, on Wednesday?
Yeah.
so we should submit the homework.
Yes, you have to give it to me. Yeah, you have to leave it here.
I submitted my homework on Blackboard, but I forgot to print it out today. But it's already submitted.
All right.
On the
No,
website.
you still have to print it and give it to
Okay,
me on Wednesday.
so on Wednesday.
Okay?
Okay,
Yeah.
cool.
Yeah.
I think accountability, according to a textbook, accountability is only the central, only play the central role for governments.
Yes, that's
But
the.
for profit organizations, the accountability is not the central role for them.
But it is. Yeah, it is. It is. Yeah. It is because their obligation to their to the to the donors, that's accountability. The responsibility they have to the donors, because their accountability is to the donors. But don't worry about it. Just put it there, but that's it. Don't read too much into it because it's this. Things are combined together. Okay.
Yeah, and for 3, choose false or true.
Governments defer by who do not expect to receive benefits. That's true.
True.
Yeah. Okay. Yes. No, bring it on Wednesday. Yeah.
But I forgot to print it out. Can I just print it out right now?
No, you can give it to me on Wednesday.
On Wednesday?
Yeah.
Okay.
Okay.
If I print it out earlier, can I send it to your office?
No, I won't be there. So bring it on Wednesday. Okay. Just do it that. Yeah.
Questions for the group project.
Yeah.
They're in each chapter, right? But
Yeah, they're in each
where
chapter. Oh, here they are.
couldn't even find. I was looking all
No,
weekend. I could not
No,
find
here
them
it is.
anywhere.
It's usually the first question under exercise and problem. Examine the
Oh,
CAFR.
okay.
And what you have to do is just answer
Yeah.
each of the questions.
Okay.
And they are usually the first one in every chapter.
All right, starting
Okay?
in chapter 1.
Chapter 1. Yeah.
Okay, thanks.
I'm sorry, I actually got confused. I just don't know where I placed it.
Okay, just make sure you bring it with you, okay, on Wednesday, so I can have everybody's. All right, sure. Yeah. Huh? Yeah. I'll be here for a few minutes if you want to do that. That's fine. Yeah, sure thing.
Are you gonna post the solutions for the ones we did in class online too? I'm just asking because we went through a quick list. I missed some of the answers.
Just the homeworks. I'm not going to post the other ones. Just the ones that we did the homeworks on. Yeah. Because I like to use them in the future. So that's why I can't release all the solutions, you know? Yeah. But
Can I just send you an email with the ones I missed later or something? Or like,
did you print it and bring it
no,
with you?
no. I'm saying the ones we did in class. I missed.
You don't have to send me.
No. I know that. I missed some of the answers we went over in class.
All right, you know, on Wednesday when you come in, I can go over those answers with you before the class, okay? I can tell you what the answers are, okay? Yeah, that would be fine. Yeah,
I just wanted to if I didn't think you were gonna connect, so I just like made notes for myself. But use a hot data. I don't know if you want me to.
The what?
print a new one? I will send you one.
Yeah, no,
Do
no.
you want me to send like a print?
No, you can give me this.
Just this
Yeah,
one?
this is fine.
Okay.